What happens when influential oil meetings get rescheduled? Well, let's take a peek into the recent events surrounding the Organization of the Petroleum Exporting Countries and its allies, collectively known as OPEC+. This group's meetings, initially slated for the 25th and 26th of November, were abruptly shifted to the 30th. Now, you might be thinking, what's the big deal? It's just a few days, right? Interestingly enough, this small change had a significant impact. Following the announcement, oil prices took a bit of a tumble, dropping by over $3 per barrel in Thursday's intraday trade. One could say that the world of oil and gas is a delicate ecosystem, with even minor alterations causing ripples that can reverberate across the globe. It underlines the sheer influence wielded by OPEC+, an influence that can shift markets with a mere rescheduling of a meeting. So, the big question is, how does this rescheduling affect global oil prices? The rescheduling of the OPEC+ meeting sent shockwaves through the oil market, when the influential Organization of the Petroleum Exporting Countries and its allies, collectively known as OPEC+, announced the shift of their meeting from November 25th and 26th to November 30th, the oil market responded swiftly. Prices plummeted by over $3 per barrel in Thursday intraday trade, a sharp decrease that underscored the significance of these meetings on global oil prices and market stability. OPEC+ meetings are vital because they're where decisions about oil production quotas are made. These decisions have far-reaching implications for the global oil market, affecting everything from the price at the pump to the bottom line of energy companies. In this particular instance, the rescheduling was due to disagreements over output levels for 2024, with African oil producers, notably Angola and Nigeria, pushing for a higher oil output allowance. These nations, rich in oil reserves, hold considerable sway within the OPEC+ alliance. Their quest for a higher output allowance is a testament to their influence and their ambition to capitalize on their resources. As the dust settles and the meeting draws closer, the oil market is watching with bated breath. Could a compromise with African producers lead to higher output levels and potentially lower prices? Only time will tell. But as we've seen before, oil prices are anything but predictable. But it's not all doom and gloom in the oil market. As we navigate the ebb and flow of the oil market, it's important to remember that potential recovery is often just around the corner. In fact, we're already seeing signs of this recovery in the current Brent crude prices. After the initial drop following the postponement of the OPEC+ meeting, prices have been steadily climbing, and as of Friday, they were trading above $81 a barrel. This bounce back is a testament to the adaptability and resilience of the oil market. It's a market that responds not only to immediate changes but also to the potential of future developments. And one such development on the horizon is the potential compromise with African oil producers on 2024 output levels. Now, this is a development that's worth keeping a close eye on. Why, you ask? Well, African producers like Angola and Nigeria have been pushing for a higher oil output allowance. If a compromise is reached, it could mean an increase in the global oil supply. And an increase in supply, as we know, often translates into more competitive prices. According to 4 OPEC+ sources, the organization is moving closer to finding this middle ground with African producers. This development could have far-reaching implications for the oil market, potentially leading to a more balanced supply-demand dynamic and, ultimately, to a recovery in oil prices. So, as we observe the shifting sands of the oil market, it's crucial to keep in mind that the current dip in prices is but a temporary phase. The potential recovery is already in the making, with the Brent crude prices climbing back up and the impending compromise with African producers. Indeed, once the dust settles and the rescheduled meeting takes place, we may well see oil prices recover. But as always in the oil market, only time will tell. And while we wait, we continue to watch, learn, and adapt, because that's what it means to be a part of the ever-evolving oil market. So, what does all this mean for investors and the global oil market? To sum it up, the rescheduling of the OPEC+ meeting led to a temporary drop in oil prices. However, the potential compromise with African producers suggests a recovery might be on the horizon. The takeaway? The oil market is ever-changing and unpredictable. It underlines the importance of staying updated on the latest developments. As always, stay tuned for the latest updates on the global oil market. Until next time, stay savvy, investors. Savvy.